Passively investing in real estate is mostly passive, but it does require some upfront work to make sure that a particular offering aligns with your goals. And the best way to do that is to ask the sponsor a whole bunch of questions before you transfer your funds. And to help do that, we are in the middle of a series talking about questions I like to ask about the sponsor and the property manager, the property itself, the surrounding market, the business plan and the projections, the construction plan, about the loan and financing, and then finally about the legal documents. Now, to help myself do that, I curated 194 questions from my own experience and from other experts. And I know 194 is a lot, but that's because I like the details. And if you also like the details, you can get all 194 questions by checking out the link in the description. But for now, I would like to focus on the 8 questions that you should ask about the business plan and the projections. And if all you do is ask these 8 questions, I guarantee you that you will be on a much better path to making wiser investment decisions. I'm James Furlo, providing strategies and tools to help real estate investors maximize their long-term cash flow while minimizing headaches. Thanks for watching. Question number 1, which I love, is where has the sponsor intentionally kept conservative assumptions? When it comes to underwriting a property, there are a ton of assumptions just because you just don't know, honestly, when you're getting started. Do you know how much the property will sell for in 5 years? No, nobody does. So you have to use an assumption, an educated guess. And so they should tell you these types of things. And to be honest, it's a bit of a badge of honor to be able to say, oh, I could have put this in, but I didn't. That's their way of saying, I was really conservative in this. And so you want someone who is being conservative. And that means that they are making sure to protect you on the downside so you don't lose your capital. Number 2, and this one's pretty easy, but what is the strategy? Is this a fix and flip? Is it a hold on forever type of thing? Is it a syndication with a simple value add? Is it a wholesale? There are all sorts of options. You just simply want to know, what are we doing with this thing? Question number 3. If vacancies are high, what needs to happen to hit the occupancy targets? Ideally, the answer to this has more to do with, well, we're going to renovate some units and get better tenants in, as opposed to saying, well, it's a really bad market and populations are headed down. So you just want to pay attention to the answer and for the strategy behind getting those occupancies much higher. Number 4, what is the assumed increase in rent rates? So they will definitely be able to tell you, here's what they are today, and here's what our target rates are based on what we think we can get today. But if you're holding on to the property for anything longer than a year, there's some sort of assumption for rent rates going up. And you just want to make sure that they are sticking in line with what's currently happening in the industry. Question number 5, what are the primary KPIs and projections? There are a lot of different KPIs that could be chosen from. Some of my favorite ones are average annual return, and chances are that's the one that your sponsor is going to be talking about at the beginning part. There is your cash on cash, which is your return just solely based on cash flow, not a refinance or sale in the future. There is also the internal rate of return, which is very similar to the average annual return, except it takes into account time. So cash flows in the future are worth less than cash flows today. Personally, that is my favorite one to look at, but it's also can be kind of hard to wrap your head around. There's also your equity multiple, or EM, and that one is if I put in $100,000, if I multiply it times this number, that's how much I expect to get back. And then finally, you might want to look at the year 1 cash flow just to see, is it positive, if it's negative, and if it is negative, how negative is it? Number 6, what are the major risks of this offering? This question is so important. This is probably the number 1 question that you should be asking about. And they should have an answer. They should say, yep, it's these couple things, and it's probably going to be related to some of the other questions that you've already asked. And you might even want to ask to see a base case scenario, a worst case scenario, and then a best case scenario to kind of get an idea for how much slack or margin there is in the deal. And another follow-up thing that you can do to dive a little bit deeper is to ask, what is the exit strategy in an adverse market? Number 7, does the plan have enough reserves? This is one of those questions that you normally don't ever think about until things go south, and then suddenly the sponsor says, oh my gosh, we had a problem. We need everyone to contribute an extra $10,000 to fix it. And you go, wait, what? So you want to ask about it. And there's some rules of thumb, like you want them to have, let's say, $1,000 per unit or 3 to 6 months worth of expenses, just in a reserve account and emergency savings essentially. But you want to make sure that they have something. And number 8, are all the financial fees included in the financial projections? Hopefully, ideally they are, they absolutely should be, and you just want to double check that the returns that they're telling you are after all of those and not before. It's a little bit of trickery that can be done, but ideally you're working with a sponsor who's not being tricky at all, being super straightforward about it, and so they should already all be included, but it just doesn't hurt to double check. And so there you go. These 8 questions are super important for you to understand the business plan, and I highly recommend you ask all of them. And you may not be surprised to learn there are so many more that you can ask about the business plan and projections. And so if you would like all 194 questions that I ask, that you can pick and choose the ones that are most important to you, just check out the link in the description and you can have them. And if you found this helpful, please like the video. And if you'd like more tools and strategies to help you maximize your long-term cash flow while minimizing headaches, please subscribe. Thanks for watching.